All right, welcome to the Explainer. Today, we're going to talk about something that is quietly, but seriously, impacting your wallet. It's this massive, coordinated effort by the world's biggest economies. And believe me, it is fundamentally changing the value of every single dollar you earn.
Okay, look at this number, 7%. So what is that? Well, that's roughly the rate of global inflation every single year. To put it bluntly, it means the money you work so hard for, it's losing about 7% of its buying power year after year.
And you feel this, right? It's so frustrating. It feels like the price of everything is going up, but your savings just don't go as far as they used to. It really is like a hidden tax on your money. So what is really going on here? Let's dig in and find out.
And look, this isn't just some random market fluctuation. No, the real reason is something much bigger. We're talking about a massive, coordinated effort by the world's largest economies. You could almost call it a global money printing war, and it has some pretty huge effects on all of us.
All right, let's really get into this. And I want to be clear, we're not talking about small little tweaks to the economy. We're talking about major world powers, the USA, Japan, China, injecting unprecedented amounts of money into their systems. This is a full-blown global strategy, and the consequences, well, they're enormous.
I mean, just look at the scale of this. It's absolutely staggering. If you go back to the year 2000, the total amount of money in the world was about $26 trillion. Fast forward to today, and that number has just exploded to a mind-boggling $142 trillion. It's simple economics, right? When you have that much more money chasing the same amount of stuff, the value of every single one of those dollars has to go down.
So the big question is, why? Why is everyone doing this at the same time? Let's break it down and look at the key players, the US, Japan, and China. Because it turns out, each of these giants has its own reasons for firing up the money printers.
Okay, let's start with Japan. They've just pumped in 17 trillion yen, that's about 110 billion US dollars, into their economy. And to be honest, they're in a really tough spot. They're kind of caught between a rock and a hard place.
So what's going on? Well, they're getting squeezed from both sides by their two biggest economic partners. On one side, you have the US hitting them with tariffs on cars, which is, their #1 export. And on the other side, a political dust-up over Taiwan has led China to basically ban its citizens from visiting Japan, which was a huge source of income.
And that tourism ban isn't a small thing. It is absolutely devastating. Just look at the numbers here. Japan was getting 9.5 million visitors a year from China and Hong Kong. That is more than the visitors from South Korea and the USA put together. And now, poof, all of that income is just gone.
Okay, so that's Japan. Now let's hop over to the United States. They're looking at a totally different playbook. Instead of bailing out industries, the idea on the table is to put money directly into people's pockets. We're talking stimulus checks. And this really breaks it down. It's a pretty straight line from stimulus to inflation. The government sends out checks, people get that new money, and naturally, they spend it. This causes demand for stuff to shoot way up. But the supply of that stuff, it's still the same. So what happens? Sellers raise their prices. And the end result is, you guessed it, inflation for all of us.
Now, this particular plan would cost something like $600 billion. And the idea is to pay for it using tariffs, taxes on foreign goods. It's being framed as a sort of dividend for the American people.
All right, and then we have China. They're playing a completely different game. They're injecting a massive $1.44 trillion. But this isn't just about stimulating the economy. Nope, they're doing what you might call economic surgery. And they have two very specific goals in mind.
And it's a really interesting two-pronged attack. So on one side, they're using this fresh cash to deal with the mountain of debt that their local governments have racked up, basically trying to stop a crisis before it starts. And then with the other hand, they're pouring money into huge new infrastructure projects to set themselves up for future growth. So they're kind of fixing a problem from the past while building for the future all at the same time.
Okay, so we've seen why these major powers are printing all this money. But let's bring it back home. Let's get back to the most important question of all. What does this actually mean for you, for the money sitting in your bank account?
Well, here's a big clue. Negative 9.9%. That's how much the US dollar index has dropped this year. And that index, it basically measures the dollar's strength against other big currencies. Now, because the US dollar is the world's reserve currency, when it gets weaker, it tends to pull everyone else down with it. It's like an anchor. And you have to remember, none of this is happening in a vacuum.
All this new money is just being piled on top of already gigantic government debts. I mean, the US is sitting on $37 trillion in debt. Japan's debt is a crazy 230% of its entire economy. And as we mentioned, China's got its own major debt problems at the local level. And you can see the results of this playing out in real time. Take Japan, for instance. Investors are getting really nervous. So when they buy government bonds, which is basically lending the government money, they're now demanding a much higher interest rate, a higher yield, to cover the risk that the yen is going to be worth less in the future. A record high yield like this, that's a huge vote of no confidence from the market.
Meanwhile, back in the US, there's a 53% chance that the Federal Reserve will not lower interest rates. And why is that? Well, it's pretty simple. When the government is printing and handing out money, that just pours fuel on the fire of inflation. And the Fed's main weapon to fight inflation is to keep interest rates high, even if it causes pain in other parts of the economy. Their hands are kind of tied.
Okay, I know this can all sound pretty overwhelming, but understanding the problem is the most important first step. So now, let's switch gears and talk strategy. What can you actually do to protect your wealth when all this is happening?
The big idea here is something called a store of value. It's a simple concept, really. It just means finding an asset, anything really, that can hold its value, or maybe even go up in value, while the cash sitting in your bank account is actively being eaten away by inflation. It's about protecting your purchasing power.
Now look, I can't tell you exactly what asset to buy. That's a super personal decision. The most important thing is that you do your own research. You need to look for things that you know well, that you trust, and maybe you're even passionate about. The goal at the end of the day is just to preserve the value of all your hard work.
So if there's one thing to take away from all this, it's this. Just sitting on cash is a guaranteed losing strategy right now. As long as this global money printing war keeps going, your savings are just going to get devalued year after year. You can't afford to be passive.
And that really leaves us with the final big question you need to ask yourself as we try to navigate this new economic world. In this war, in this money printing war, what is the asset you trust? Where are you going to put your faith to protect your future? Thanks for joining me on this explainer.